Hello and welcome to Kigali, Rwanda and the 2018 African Regional Conference. I'm joined now by Walter Volker, who is the Chief Executive of PASA. Walter, thank you for joining me.
Very welcome, James.
Now, you're in the process right now of doing a huge redesign and rebuild of South Africa's payments infrastructure. It's a big, complex job, but tell us why there was a need to do this and what was sort of the imperative behind it?
Yeah, it's a very interesting project, as you say, and it's been a while coming. So for the last few years, we've been looking at what we call the EFT system, electronic funds transfer, which is really the core electronic payment system, and finding certain limitations there that are really frustrating us. So just to give you some context, electronic payments in the retail payments context makes up about 30% of the volumes, so it's totally dominated by cards. Probably the total retail volumes of about 5 billion transactions per annum, just to give you an idea. So 30% of those are electronic, credits, debits, etc. And then value-wise, we're talking about $1 trillion for retail payments, about 10 trillion for the total value, of which electronic make up 70%. No, sorry, 90%. So 90% of the volumes are in the electronic payment system side. So it's really an important payment system, especially in the retail payments context. And it served us very well. It's a payment system that started in the 70s, actually even going back before that, but became electronic in the 70s. Before there was hollerith cards and all these kind of things. But in the 70s, we created a first ACH to do interbank clearing of electronics. And it served us well for decades. I mean, we've accommodated the major technological changes such as internet banking, mobile payments. All of those have been done on the same platform. And remarkably, we've done it with a message length of 180 bytes. Can you believe it? I mean, probably in the 70s that was more than enough, but as you know, today 180 bytes just doesn't do it for us. So that in 2006, when we wanted to do real-time payments, we just found that it's just not going to do it for us. So we had to move to ISO 8583, which is essentially a cards protocol. And that was the first sign that this is maybe problematic. So we found that the 180 byte message protocol was very proprietary, locked us into South Africa, didn't allow us to do cross-border. So we just realized we had to do something fundamentally different. So that was sort of the payments, the imperative for change.
The rationale, okay.
Exactly.
And so you've obviously been spending a lot of time looking at how to go about changing it and study and research into that. So how did you go about looking into that transformation?
All right, so the next thing we did was, rather than just jump into redesigning, we thought, well, let's first do a bit of research. Let's see what other countries are doing. Maybe we can learn from them. As you know, a lot of countries are moving towards instant payments or faster payments, which we did in 2006. A lot of people are looking at ISO 20022 as a new message protocol. There's a whole lot of new things, and they're looking at open banking. So there are a whole number of themes that are global themes that are pushing various countries to change. And so we thought, well, let's do some research and see what other countries are doing. So we did contract a research company to assist us, partnering with a local company. And we looked at 8 countries around the globe, a mix of so-called first world countries, the US, the UK, Europe, of course, even Australia, and a few developing countries. So we looked at India. They've done quite a bit of work in innovating payments changes. We looked at Nigeria and a few others. So 8 countries, looked at what they're doing in modernization. And then at the same time, we interviewed about 50 industry leaders in South Africa to see what are the change imperatives, both bankers, but also users of the payment system and infrastructure providers, fintechs. So it was a good mix of different people. And out of that research, we found very interesting common themes coming across from the world. What we did have to do is differentiate between goals, very high level goals, and we came up with about 10 common goals across the globe. Then the next level we called levers that you can pull to achieve those kind of goals. And we came up with about 16 common levers. The research was really helpful, very important, and it really helped the industry sort of focus on what's really important.
And get an aim and a target in place. Yeah. And so just very briefly, if you can give us a sense of, are you finishing the study in July, I understand, is that right? The conceptualizing the framework. Yeah. What will happen next in the coming year or two?
Right, so as you said, up to about July, we're hoping to crystallize this new architecture, because we realized it can't be an incremental change. It has to be fundamentally different. We're looking at a layered architecture, a layered approach. Because it is so fundamentally different, we need to get buy-in to this change, because it is so different. First, we have to look at our own board, which is PASA's governing body, to ensure that they are happy with these changes. And obviously, the same applies for our major members, which are some of the major banks, so we have to consult with them. And then also, most importantly, is the South African Reserve Bank, because ultimately, the sort of encapsulating layer of this approach is a regulatory one. So even though we want to ensure that from an enabling point of view, we can do whatever we like, obviously, there are risks involved, there are regulatory and policy objectives you want to achieve, and the Reserve Bank is key to that. So they will have to also approve and agree to this new approach. We're hoping that they will like it because it's less inhibiting. The trick is more about how you licensing the various participants in this new ecosystem that we're getting more and more excited about.
Okay, fantastic. Well, best of luck with that moving forward, Walter, and thank you so much for your time.
All right, very welcome.